You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in these crazy whipsawing markets we're all living through? Let's find out together, shall we? My name, of course, Mark Longo from the THE, OptionsInsider.com, as well as from the network upon which many of you are cutting your teeth out there these days. We don't mind. Cut away. Bandwidth bills be damned. There's more where that came from, so have at it out there, listeners. If you do like what you hear on whatever platform you're getting it does help if you leave a star or a rating or a review, whatever your platform lets you do. Clearly, looking at the numbers, clearly there are new people discovering the world of options all the time. They need a place to turn, so if you want to help them in that discovery process, we've been around for a while. We have a lot of ratings, but in the new ones, clearly the algorithms favor those. So the more the merrier out there, especially for you newer additions. And of course, if you want more content in your lives, you don't want your broadcast week to end with volatility views. You want to participate on the awesome Pro Q&A we just had a couple of days ago out there with Mr. Vixologist out there talking all things universe of volatility and vol ETPs. It was a fun one. Or last week when we dove deep into all things trading psychology. Only one place to go to find all those goodies. The THE OptionsInsider.com/pro is the place to go to join our fun little secret club there. Also, you get live streams, all kinds of fun giveaways, you name it. The world is your oyster. If you head over there, theoptionsinsider.com/pro to learn more as we go around the horn and see who we're joined by today. First, let's go out to the sleepy hamlet of St. Charles. Rumor has it I may be heading back out there in, about 10 days or so to the Grand Kane County Fairgrounds again. We shall see. where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to Ye Old Program, sir.
Always a pleasure to be here from the sleepy hamlet and good old Kane County Fairgrounds. I see them all the time when we go to Costco.
Yeah, it's literally right there. It's literally right next door to it. I remember I went there the first time and I was like, man, where am I going to find gas in the middle of nowhere? What are the chances there's a Costco anywhere within 50 miles? And lo and behold, it's literally 100 yards away.
It's St. Charles. We aim to please Mark Longo at every opportunity.
And there's a Skippies across the street. It's like paradise on earth right there. I mean, what more do you need? The fairgrounds, a Costco, and a Skippies. You're kind of good to go for all of life's basic needs. All right, let's keep on rolling. Let's go around the horn. Let's dial that needle all the way out to the dark, the stormy, the turbulent shores of Maine. What insane person would live there, I ask you, beset on all sides by locust and clam pirates and horrific weather? None other than the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, how go things on the shores of Maine? Are things getting nice and dark and stormy?
Yeah, you know what? The fall is settling in. It's a little cooler. I got to wear a sweater in my office now. I have some kind of, college professor look with a white starch shirt on and a gray wool sweater. So I'm feeling kind of Ivy League today.
I can see
even
you.
Though
I
did not go to an Ivy League school.
I can see you rocking the tweed with some elbow patches. That sounds like you.
Yeah. I could do that. Maybe like a pipe. Hat. Maybe kind of hat with a pipe.
Yeah, nice little pipe. Turtleneck sweater. You can get the look going. We'll workshop it. As we keep dialing that needle all the way down to NYC, to the hallowed halls of CBOE East, where we are joined once again by the FLOWMASTER himself, Mr. Henry Schwartz from the aforementioned CBOE. Mr. FLOWMASTER, welcome back to the show, sir.
Thank you, Mark. Always happy to be here. Andrew, I want to know, is the gray sweater, is that just your chest hair spilling over the top of the collar? That's my question.
Henry's just full of them today. You missed the pre-show chat, listeners. Things got a little blue. Instead, we'll just keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, let's get into it. Let's mix it up with this crazy market. Let's see who comes out alive at the end of the day, shall we? And I mentioned kind of topsy-turvy, whipsawy markets, and then we got another one in store for us today, listeners. We started things off kind of tranquil, kind of gently meandering in one direction or the other. It seemed like that start of that direction was going to be south today. We started gently threatening the 43.5 level. Then we started rallying. We got back up to what looks like around 43.85. Somewhere in that direction, and then since then, we are right back to the dark side again, listeners. Coming into the start of the show now, all the major indices have tilted toward the red. The S&P off about 0.45%, getting back down to the 43 double or so range, starting to threaten 43.5 again. Will we break through it? We shall see. Probably by the end of the show, we'll have an answer to that. Probably sooner than that, I would think. The Dow off almost 0.5%, and the NASDAQ, a rare day where the NASDAQ is the laggard, only off about 0.33%. That means most of our vol friends were aggressively exhaling. I mean, they just couldn't shed vol fast enough this morning. This stuff was just filling left and right. Finally got out of my Bix put fly. That was a nice little fill on the open, so thank you for that, vol gods. Now it seems like the shedding of vol has finally started to slow down a bit. VIX, when we kicked off the show, 1565. That still puts it down quite a bit from the Monday show. Down not quite 3 points, about 2 3/4 points out there. Of course, the low for the day came in a little bit shy of 15.5, about 1540. Seems like we are turning around a little bit again right now, so who knows where the day or even the show will take us by the end of it. VVIX. So the vol at about a 90 even when we kicked off the show. That's down 5 from the Monday show, but still frothy. Still exuberant, so we'll see where that takes us. VXX 2190, down a little over 2, about 2.1 points. See what I mean when I said they came for vol listeners? Man, they've been crushing it. UVXY 14.25, down nearly 3 points, 2 3/4 points from Monday. You would look at these numbers and think it was a quiet, tranquil period in the middle of the dog days of summer, and just nobody wanted to touch anything, and everyone was just coming for vol. And yet there's actually some stuff going on in the markets out here. We'll get to it all in a second. And, of course, good old SVIX threatening a 30 handle again, because why not? Vol is coming in aggressively. 29.85 when we kicked off the show, listeners, up over 3, about 3 1/3 points from our last show. And good old UVIX. Ah, yes, UVIX. The tales I could tell about putting up trades in UVIX this week. And I will tell, maybe tomorrow on Vol Views, maybe for Options Oddities, we shall see. The fun tale of unwinding positions in, shall we say, post-reverse split UVIX. A fun tale to be told. Gather the children around the campfire for that one, listeners. They won't want to miss it. UVIX right now, 29.60. It was 29.15 when we kicked off the show, so already up about half a point just since we started talking. So UVIX may be inhaling again. Of course, over the past few days, UVIX has been just a quite the topsy-turvy monster, to put it mildly. Got up to about 33 3/4. That was just yesterday, now back below the 30 handle. Good luck. I was pricing up some trades out there this morning. Listen, good luck getting any sort of real quotes out there yet. It's still a minefield of madness out there in UVIX land. I've had multiple brokers even kick my orders back saying, yeah, we're just not taking any orders out there yet. So, UVIX, the dust still settling from all the fun. That is the reverse split. Are you out there? Are you back out there slinging UVIX now that it's around a 30 handle again? Much better than a 2 handle that it was not too long ago, listeners, or even below. So we'll get to all that fun. But first, let's go around the horn. Let's go the opposite of the way we came. Let's start in the hallowed halls of CBOE East once again. Mr. FLOWMASTER, sir, a lot to unpack. The market whipsawing. We came into this week, a lot of people were expecting maybe a little bit of a pop in vol, a little bit of sell-off in the markets. Instead, we got that a little bit on Monday. Then the rest of the week, we got literally whistling past the graveyard. Markets rallying hard, vol coming in like they couldn't get rid of it fast enough. Seems like maybe the worm turning a little bit today, sir. What has been catching your eye on a very tumultuous weekend day?
Definitely tumultuous. Yeah, we came in Monday to the headlines out of Israel, and futures were down about 45, I think. And there was fear, right? And, you know, we have seen these kind of dynamics in the past when there's things like Ukraine and other kind of real geopolitical disasters. Market gets spooked, but we really tend to bounce off of that pretty quick. And that's really exactly how Monday played out. I think the range for the S&P was over 100 handles, which is kind of extreme. And so that, quick pop in volatility, but it has kind of mellowed out. I don't know. We when we started this call at 1:00, I think the market was about 30 handles higher, so in the futures. So it's definitely, there's still a lot of volatility out there. There's a lot of, I think people are still very nervous, right? You don't know what the next headline could bring. That kind of keeps people on edge, but at the same time, military activity tends to be good for the market, right? So that's kind of what we're seeing. A lot of people kind of trying to kind of adjust their portfolios and also be mindful of the headlines, which are not good.
Yeah, a year and change ago when all that Putin, Ukraine stuff kicked off, we polled our audience, and it seemed like the market was kind of discounting that right away. Our audience did as well, too. In our first initial poll, when we asked our audience, how long is this going to take to play out, the reverberations of this in the market? They were saying it's going to be done in a couple of weeks. They were at 2 weeks. That seemed to be a little bit optimistic. We reran the poll a few weeks later, and sure enough, they were much longer term, because clearly it did. We've seen the impact still in markets like nat gas and crude, and of course wheat has had long-standing impacts out there. Israel, not quite a producer of as many things out there, of course, but it is a gateway to a lot of things. And also the concerns about the broader escalation of the conflict certainly could impact a lot of markets that we trade. So interesting to see how the market does, you're right, kind of move past a lot of these things very quickly. Our audience did last year. We didn't do a poll this year on this one. Maybe we should do another poll to gauge the sentiment of our audience, even though if past is prologue, our audience tends to look past a lot of these things, as the market tends to do as well. Let's keep on rolling. Let's go out to the land where he looks past nothing, listeners. He's always in his tower in the dark and stormy shores, always watching, always scanning, and apparently also buying all the upside in Oatly, sir. So congratulations to you, Mr. Rock Lobster.
We have to save the Oatly for options.
Yes.
For options.
Only the premium folks get that fun.
Because this will be an abject lesson of taking your good money and throwing it after bet. The only thing I can say in my defense is I did close some VIX puts this morning, so I had some money burning a hole in my pocket. So I took a small fraction of that. I can't believe the fact that this trade, I can't even talk about it right now because it's perfect for oddities. Actually, what I'm looking at for what I would say is more immediamente is the simple fact that nobody wants Treasury bonds. We had an auction today. It did not go well. So my bond trader at Option Pit, who is very good, he's an old Bear Stearns guy from a gajillion years ago. He was saying the auction was nearly twice as bad as yesterday's 10-year auction, the 30-year this year. Auction rate rewarded 4.837% versus a market rate of 4.8 at 1 p.m. So, and we say it on this show, and there's Twitter snickerers at us, but we will be vindicated in this, that until Uncle Sam stops spending so much money, we are still going to have this, turmoil, whatever. So right now, and I think for the most part, the market has traders have gotten by it. They're like, okay, they'll fix it. It'll be fixed somehow, some way. And, up until now, it hasn't materialized. So, and, what we have kind of that not happy correlation where for a while last week, bond prices, yields would be going up and then stocks were actually, rallying because, higher, used to be there's more growth, a little more inflation and stocks go up. That was kind of the old virtuous cycle. And now we're kind of back into the sort of, bond prices are down, yields are lower, or bond prices are down. But now stocks are down with it. And we couldn't break out of the cycle. So we'll see how that goes. But I mean, we got to some pretty low levels of VIX today. So like that product UVIX, they split it and it went 34.29 in 24 hours. So a huge range in that particular product.
That thing was bonkers.
And crazy, right? They split it what the funny thing, remember we were talking about on the show, wow, it's going to split at 40. We're going to see a 40 handle. That'll be great, right?
Got close.
And by the time, and literally 3 days later, it opens 31, splits 31. So there's no real love for the vol products, even though it's getting a little lift this morning after being down. But again, you still got VIX futures are, a 17, 18 handle, and realized vol is still relatively low, and S&P 500 is down 0.5%. And all of a sudden, VIX shot up from being down into around the mid-15s this morning. So, this whole thing going on in the Middle East is, I'll just say it's a tragedy. I'll leave it at that. And we don't where does it go? Is there an end game here? For all the bad things that have happened, it's just, so from a vol point of view, if the Middle East thing was not happening, VIX would be 14 right now. No question in my mind. That's about where it would be trading because we're waiting for earnings. Generally, you don't have a lot of vol just waiting for earnings. You get a little compression because waiting for the numbers to come out in the next, several weeks. So it's a very, I think the market is on that kind of knife edge there. So we'll see how long it lasts. I don't know. The bond auction going poorly, so there's no real demand for treasuries with all this kind of global tumult around. Maybe, Chinese are selling, whoever's selling, everybody that owns them that's not the U.S. is selling. I don't know. But, it is contributing to some problems. So at least right now, but, SPX is only down 0.5%. So for whatever reason, it's not enough to get everybody just to, hide under their desk yet. But, things are looking good this morning. It's just not now.
Indubitably, as we keep on rolling, a man who even in a blood red market, he sees rays of sunshine and notes of optimism. He is the uncleist of Mikes. Mr. Uncle Mike, sir, bestow your optimistic views upon all of us, sir. Have at it. The floor is yours.
Everything is awesome. S&P 6,000 by December 2024.
I think I would say next week. Why wait till December? Let's get it next week, baby.
Yeah, I'm not quite that optimistic. No, I think that with where we are, let's just look at the big picture of things. I am bringing up a chart of SPX over the course of the last 3 years. And within the last 3 years, you know what? I'm going to bring it up over the course of the last 20 years. And so if we look back on December of 2020, in December of 2020, the S&P was at 3,600. And in looking at that, I'm sorry, let me bring this over. We were at, we closed out December we closed out 2020 at 37.5. And so from there, keep in mind, that's off of a rally. I know I'm factoring COVID into here, but that's off of a rally to where the S&P actually got as low as 2191. And it went from 2191, and I know once again, this was the COVID scare I'm factoring into this. It went from 2191 all the way up to 3750. Now, that's a major, major rally. Once again, I know it was because of the blip from the COVID season, but that's the way things go sometimes. And then let's look at 2021. We actually went from 37.5 approximately in the SPX all the way up to 4,800, just over 4,800 at the beginning of 2022. So if you actually look at the distance with which we came from the COVID lows to where we got down to 2191 to the all-time highs on the first day of trading of 2022, we've come a long way, baby. And so at times when the market goes up so rapidly, it's going to pull back. And any market that gives big rallies is going to also give big looking pullbacks. And so where we've come down to the lows of where we've actually come down in the market were in October of 2022, and the lows were 34.91. And so from there, we've retraced somewhat, and then we're on our way back up. We still have not touched the all-time highs that we made on the first day of trading in 2022. But my point is that when you have those kind of rallies, even if you are going to have something like COVID, there's going to be some pullbacks at times. And so with the problems that we're having right now with a lot of spending, I believe I'm in full agreement with Andrew. And if you want to get me on my soapbox about how our government spends too much money, if you get me going, it's a great way to tick off listeners, because I will get going on that. And I will tick somebody off in my opinions on how our government spends too much money on things they don't have to. So I'm not going to do that. But my point is that we've been this whole rally that we've had. We've been saying the government's spending too much money ever since the 80s, probably even before that. But I was born in the late 70s, so I don't know. So with that being said, spending is a very realistic part of government. Now, is it out of control right now? Good gosh, yes. And so we have so much debt right now. Are the chickens going to come home to roost, or what's the saying that we want to use with it? I don't know. But I almost feel as if we have such inflation that $1 trillion doesn't buy you what it used to anymore. So because we have all of this debt, the debt's the same, but inflation has made it go higher to almost make the debt less. Now, what do I mean by that? We're getting deep today, I know. Let's say, for example, that I take out a loan, a personal loan or a mortgage, whatever you want to call it, today for $100,000. And I find a way to just I'm going to do a property rental to finance the cost of the mortgage, or whatever the case may be. And so let's say that just interest only, and I know I'm not trying to pitch interest only loans or anything like that. I'm just trying to illustrate a point here. And let's say 10 years from now, I have to pay that $100,000 back. Now, of course, I paid the interest on it, but 10 years from now, $100,000 is going to be worth much less. So that loan that I took out actually was an asset to me because I was able to do something with that $100,000, build up my rental property, invest in business, invest in stocks, or even buy some of those penny options that Andrew was talking about before the show, whatever the case may be. But the point is, when I have to pay back that $100,000 in 10 years, it's going to actually be less money if we have more inflation, because the $100,000 stays the same, but because $100,000 has less purchasing power, it's going to hurt me less in 10 years from now if we continue to have inflation. Now, on a grander scale, with the inflation with which we've had and the trillions and trillions of dollars with which we've had, do I think the government's spending too much money? Yes, I've already stated that. But $1 trillion isn't as big of a deal as it used to be because of inflation. And I believe that, is this the rate at which we're going up sustainable? No, I don't. But is it as bad as we think it is in terms of, oh, we spent $1 trillion on this, $1 trillion on that? No, I don't, because $1 trillion doesn't mean as much as it does as it has in the past. So that's my ray of optimism, to try to make myself feel better a little bit anyway on the insane amount of debt that we are having as a nation. And that's my take on it today.
Well, yeah, you can't feel better by looking at this market because the sell-off seems to be exacerbating. Even as Uncle Mike was trying to calm us all down, the market's saying, nope, S&P off about 0.75%, Dow similar percentage, and the NASDAQ off about 2/3% now. So giving up the ghost. Is all that translating into some paper? I'm going to guess probably yes, at least on the major index front. We'll see. The micro stuff, the single name stuff's kind of been languishing of late. We'll see if that can turn around today as well. Let's fire up the old trade alert machine, shall we, listeners, and see what we can find out there. Let's go traipsing through the indexes first, see what we find out there. And the answer to a lot of the major indices is, yeah, it's a banger day already, listeners. VIX, S&P, they like themselves a little bit of whipsaw-y action. That's exactly what we're getting right now. VIX closing in on 800,000 contracts already, listeners. 780,000 contracts on the tape. My goodness, that is, I think the technical term is a heck of a lot of paper out there. The big dog today, 70,000 of the NOV 15 puts have gone up already, and 67,000 of the OC 16 puts. So maybe some rolling action. I don't know. We'll dig deeper into that on vol views tomorrow. Either way, nearly 800,000 contracts on the tape. The ADV closing in on 900,000, 884. They are not playing around in VIX land right now when you're averaging nearly 1 million contracts a day. In VIX, the game is afoot, listeners. SPY, no slouch either. 5.66 million right now. The ADV, 8.82 million. Yeah, it's going to hit that today as well. The S, how many times have we talked about, man, 1 million in the S? That was a big deal about a year ago. Now, fast forward to right now, 2 million. We're already at 2 million in the S right now, listeners. Just ridiculous paper out there. And the ADV is closing in on 3.25. I'm going to run it just because I'm a glutton for punishment, listeners. Yes, I take it back. Of the top 20, 18 are expiring today. 2, somehow, looks like the NOV 45 half, 46 half vertical went up 26,000 times today, and those 2 snuck into the top 20 today. But outside of that, it's all expiring today business. Either way, nearly 6 million contracts on the tape in SPY and already 2 million contracts on the tape in the S. Small caps, IWM, 741,000. Man, they are coming for small caps today, off 2.25% right now in IWM. My goodness, they're annihilating stuff out there. The ADV right now, 1.2 million, and that seems like a lot, listeners, but they also seem like they're on pace to hit that today. So look out below in small caps land, and the Qs, not to be forgotten, 2.85 million already. And the ADV, almost 4 million, 3.93 million. So yeah, the macro stuff, the major indices, they are putting up some numbers. Now, the issue, the dichotomy comes when we get to the single name stuff. They, for a while now, have been kind of the land that time forgot from a volume perspective. We're putting up numbers that are somewhat reminiscent of the dog days of summer or late December, at least for the bottom half of the top 10. Let's see if that's the case again today. And the answer is, yeah. Top half, a little bit different story. Bottom half, you would look at this and think we are in December or in August. It will only cost you 160. Look how much paper I just relayed for the indexes, listeners. And it only cost you 160,000 contracts to break into the top 10 in single name. So once again, nobody's playing in single names. Everybody's out there slinging small caps or VIX or the S or probably a lot of zero day. But not number 10, ChargePoint. Only 160,000. You know, it's weird name. ChargePoint makes it onto our list, listeners. But that's where we are. The name that I have forsworn from the Odd Block and from Options Oddities, because there's just ridiculous paper out there for days. ChargePoint right now, 357, off about a quarter today, or 5.5%. So apparently things no bueno out there in the land of charging electric vehicles. They're off 12% over the past week. So they are coming for ChargePoint. On the year, they're off 73%, or nearly $10. So hopefully whoever's been rolling 100,000 lots daily out there, hopefully they're doing all right. They seem like they're doing a lot of nonsense to me out there, but hey. Number 10, ChargePoint, 160,000. Don't get me started on ChargePoint, listeners. It's like Uncle Mike and spending. I can go on a diatribe about ChargePoint options paper. I won't. Instead, I'll go on to number 9, AMC, 170,000 contracts on the tape. AMC, $10.50. So a little bit of upside here for AMC over the past week. Up 2.25 in the past 5 days, or 28%. So a nice little pop for good old King of the Apes. Wow. That's a nice run for them. Again, good for number 9, 170,000 contracts. Number 8, another name that a lot of the meme folks like, and certainly a lot of the AI folks like, and in these quieter periods has been making it into our top 10 more and more. This is Palantir, number 8 today, 194,000. Palantir managing to buck the trend. Everything else is off, but we know ever since this Israeli conflict popped off, this has been upside for Palantir. They have a lot of contracts with the Defense Department, also probably a lot of contracts overseas. Either way, $18 right now for Palantir, up about a dime today. And over the past week, it's up $2.50 or 16% just in the past 5 days. So a nice lift. We talk about all the downside this could pose for the broad global economy, but for individual names like Palantir, it was $15.50 last Friday, $18 right now. So a nice boost for them. Number 7, the news today for them has not been great. This is Microsoft, 199,000 contracts. Apparently they owe the government all the money, or at the very least somewhere around $30 billion in back taxes. Now, we all know how these things are going to play out. They have lawyers for days. They get paid to negotiate this stuff, and that's what they're going to do. So they'll negotiate it down to a pittance, $3 billion or $5 billion. A pittance to them, a lot of money, obviously, to the rest of us. But nonetheless, not the best news for Microsoft today. Off 211, or about 0.2%, 330 and a third is where it's hanging out right now. Good for number 7, 199,000. Again, number 7, we haven't even broken 200K yet. Number 6, the artist formerly known as Meta, 325.92, off about $2 today, or about 0.5%. Did you like the new Oculus? Are you a fan of all that stuff, listeners? I'm curious. Either way, we've jumped a little bit here. Number 6, 323,000. So that's a little bit more respectable. Usually that's what it maybe costs to break into the top 10 on a decent day. Today, that's all the way up at number 6. Number 5, Chip Zone coming a little late today. Number 5, AMD, 433,000. 108.60, up about 26 cents today. So a decent little pop for AMD, but nothing crazy. Again, number 5, 433,000 contracts. Number 4, keeping it in the A tech names, it is the Amazonians. What a jump from 5 to 4, listeners. We went from 433,000 to number 4, Amazon, 745,000. So Amazon's starting to put up some respectable numbers. Again, once you get to the top of the list, it's more respectable. The bottom half, the land that time and options forgot. Amazon, 131.75, off about a nickel right now. They've had a range of almost exactly $4, 134.48 on the upside and 131.40 on the downside. So a range of about $3, almost exactly there. Interesting range and kind of hanging out towards the bottom end of that right now. And again, good for 745,000. Number 3, keeping it in the A tech names. The streak is alive. It is Apple, number 3, 815,000. Apple still managing to buck the trend as well. 180.5, up about 65 cents. So how bad can things be if Apple is green on the day, listeners? Apple is the bellwether. Wherefore Apple goes, the rest of the market follows. And right now, Apple is still green. So I guess the world is not ending at the end of the day. Apple's had a low of 179.84, a high of 182.34, hanging out towards the lower end of that range, but still up on the day. Number 2, going back to the tip of the AI spare, listeners, it's NVIDIA, 857,000. NVIDIA up about $0.00 of a buck, 468.69 right now. They've had a range of 476 to the upside, and 466.60, easy for me to say, a lot of sixes there, to the downside. So nearly a $10 range and hanging out towards the lower end, but bouncing off that low, obviously a few bucks there. Number 2, NVIDIA, 857, and you know what number 1 is. It's the old Tesla, light for them today, actually 1.2 million. Usually we see them at least 1.3 million this time of day, so close, but no cigar. 260.5 for Tesla, off about $2.50 today. They've had a over $5 range, 541 to the upside, and 260 pretty much even on the downside, and hanging out, actually 260 even, but the 259 they just ticked. So obviously my screen is a little slow in updating. So 259 3/4 is where they're hanging out right now. Obviously a new low for the day, and good for 1.2 million contracts out there. Earnings, we got stuff popping off this week, listeners. Tomorrow, we're back in it, hot and heavy. JP Morgan Chase tomorrow, PNC, Progressive, and Wells Fargo. Today, we got Delta Airlines, Domino's Pizza, and my favorite, Walgreens Boots Alliance. If you want all that data for yourselves in your hot little hands, completely for free, because we like you folks, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we continue our journey right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, let's do it, listeners. Let's unleash the beast that is the Eye of Sauron. I just did a hell of a lot of talking, Mr. FLOWMASTER, so I'll let you take the reins. You can regale us with your first name. Tell us what you saw, maybe a little bit of the price action history of the stock, and then we'll go from there, sir. How does that sound?
That sounds good. You can just take a break.
I'll go have a beverage if you don't mind.
Sure. So yeah, we do have a few today, and as I said, I think that the market is nervous, even though we had kind of a rally to begin the week. This quick little sell-off that we're having right as we speak is pretty significant. We fell about 35 points in the futures, almost a percent, really. The first one I have for the Odd Block today, actually, it's back to Tupperware, a name that I remember you guys giving me grief about because it was kind of getting a little bit. We were seeing some spikes of activity. Stock was almost kind of down to zero. I think it was around $1.50. I don't know, maybe 2 months ago. Over the last week or so, that stock's doubled. Couple big updates, very speculative flow in there. It's at 256 today. I think it was at about $1.60 a week ago. And this is, when we see these low dollar stocks, I tend to quickly go look at the implied borrow rate. So you look at where the forward's trading versus where the stock is, and that basically you can back out the rate in the Trader platform, and in some of the other data shop offerings, we have this functionality so you can see what the implied rate is. And when that rate starts to go up, that's when you kind of get the short squeeze dynamics. So Tupperware this morning was unavailable to borrow and pricing in around 90% when you look at the prices. And the trade that I'm looking at is actually yesterday. It was the Friday the 13th, which is tomorrow. Maybe that's also why the market's getting jittery. It's an unlucky day. The Friday the 13th, two strike calls yesterday. When the stock was around 230, 220 actually, we saw over 2,000 that was bought for 35 cents in a pretty big sweep on the day. I think it was even closer to 16,000 traded on the day, and the net open interest change was about 13,000. So that's a new position, a very, very, very short dated position because it's basically a 2-day contract yesterday. And those are trading around 65 cents today. So even the market's taken a tumble this afternoon. Tupperware is up about, today it's up about 10%. It was up even higher before. And as I say, kind of, these, even though the meme stock craze of, 2020 passed, we still see plenty of pockets of people speculating, trying to kind of find a stock that catches fire. So that's an interesting one to me.
Well, first off, I have to take issue with your, as the Rock Lobster would say, umbrage with your characterization of how we viewed your Tupperware. We would never cast aspersions at you for loving a Tupperware, a cheapy name. What kind of people do you think we are, sir? Who would do such a thing? To shame you for your love of these garbage, cheapy names that nobody loves, as we talk about Oatly here in the chat.
Yeah, you guys still shame me for trades I made 10 years ago.
Put on an apron and have Tupperware parties. We're totally good with that.
Yeah, we're all
absolutely.
Okay with it. And yes, Mike, we did shame you, but that was a different time, a different era. You know, we don't shame like that anymore.
I have a 10+ year shame going on the Cisco calls I bought back in 2012 or
That's
whatever
true.
it was.
But in my defense, that makes for good content, so it continues. It's the listeners; they demand it at the end of the day. I don't do this of my own volition. It is the listeners at the end of the day. So, Mr. Rock Lobster, have you changed your tune? Are you now a huge fan of Tupperware as you continue to buy up all the upside here in Oatly, and they scum you for nickels left and right?
The good part is I'm officially laying that one to bed. I'm like, now I no longer care about it ever again. Well, you know, I think what Henry's right. Like, you know, the little squeeze indicator is always good. Why you would short a stock down to $1 or less or whatever is, I don't know. I just, I guess I've seen too many bodies run over by bulldozers, you know, or, you know, Mack trucks or whatever trading. So, you don't want to be run over by those, but, I think every generation brings in a new person that says that stock is going to zero. So I'm going to short it to zero and get my money. And then it's always that last dollar that can be a little tricky sometimes. So I think, I like Henry's little short indicator he's got going there, or short the short indicator, or, you know, having a little squeeze indicator on it. That's a good. We have a tool like that, a sheet that helps people with that. So I'm all for that kind of tool. So you're careful where you tiptoe into those $1 stocks.
I think you call that tool the Squeezy McSqueezerstein. Is that what you call it?
I think the Squeezy McSqueezenstein, I believe, is the proper name
yes,
for that tool.
The technical term for such goodness. All right, let's go out to the next victim that the FlowMaster has his sights set on. This is AGNC. You may know and remember this name, listeners. This is a REIT we've talked about once or twice here on the show. Ticker symbol AGNC. Trading $8.88 right now, off about 30 cents on the year. It's kind of been topsy-turvy. A year ago was exactly $8, so it's up 88 cents on the year. They rallied it to its high on February 2nd, like everything else. Got all the way up to 12.25, listeners. And then since then, it's kind of been gently drifting back to where it is right now, back around right around to 8.88 or so. And if it sounds familiar, it's because we talked about it last on this show, back on the June 26th episode. We talked about somebody coming in and scooping nearly 6,000 of the Jan 11s. They paid 18 cents for those bad boys. Those are not looking great right now, but hey, the stock at the time was 10.11, so yeah, they've given up a wee bit in the stock. I have to check to see if these are open. I'm going to assume that they still are. But that said, Mr. FlowMaster, sir, what did your eye of the FlowMaster spot out there in agency today?
So this one is on the bearish side. This is put activity, and the reason I saw it is because the put call I think came up as over 10-1. And it's very concentrated. We've seen 23,000 of the November 9 puts trade. It's a buyer based on the fact that they keep sweeping the offer. Some of them they paid 33 cents for around 11 in the morning, but most of them they had to pay about 41 cents for. So that's a big kind of change in vol as well, just because stock only had moved 6 or 7 cents at that point. And so 23,000 of these Nov 9 puts, so they're really right at the money. Maybe it's a hedge for somebody who's long stock and has gotten a little bit beat up. It's a lot of capital to throw out there if it's a hedge. And the other thing that kind of stands out is you know, when you look at the size of this trade is way above the average daily put volumes around 17,000 contracts. So this one trade is bigger than the ADV, but in notional terms, it's 2.3 million shares, which is about 17% of the actual daily stock volume. So I do like to look for trades that are just outsized like that. And if it's really a big trade that you know the market would have a tough time digesting, and it's executed in one of these multi-market sweeps where you can tell they haven't negotiated it. They've pretty much just gone to get everything they could get. So it's pretty aggressive. A stock is at the bottom of its range. I don't know. I think they hold residential mortgages, right? So, could be a play on, a recession happening rather than the soft landing. But that's a big trade, and like I said, it's to the bearish side.
While you were talking, sir, I did fire up your platform. But I had to say, if you had to if Trade Alert had to go away, but you can only keep one function, I would always request you keep the life-to-date trade summary. That's my favorite. I use that all the time. I used it again just now in agency to check on the history of these calls. And yes, first off, they are still open. The Jan 11s are the biggest position that is open right now in agency. There's about 27,000 of them open. They traded 26,000 on that day when we talked about it back on June 26th, and they're all still open. So spoiler alert, those are not looking great, listeners, and now someone has flipped to the dark side. Mr. Rock Lobster, go figure, a little bit of put paper in a REIT. Stop me if you've heard this before, sir.
This must be some kind of new show. I've never heard that somebody's buying puts in a mortgage REIT.
Never. Pay no attention to the man behind the curtain.
I think the headlines about like commercial mortgage papers all going to zero, and I just think that's all part of. I mean, you can't open up like Bloomberg News or Wall Street Journal or Twitter or anything without a pending collapse in the commercial real estate market or whatever. I would just think, wow, aren't they just going to make all those buildings condos? Can't you repurpose them? I know it's not a layup to make everything a single use unit, but in my experience, like aren't rents atrocious in every city in the U.S. and they just take all those commercial buildings and make them apartments? Anyway, so I thought some enterprising person could do that, and that would actually help property values. So anyway, or put the cost of rent down. However, I guess I'm just some sort of Pollyanna when it comes to that stuff. So it does not surprise me that these have been purchased, but we'll just see how the cookie crumbles on it. I recall maybe these puts will do okay, but I thought they had a lot of them kind of went to sort of Palookaville, right? Now these are not. I think these look like they're up money already, pretty decent money. But like last year though, I thought a lot of these puts kind of went the way of the dodo. Some paid, but a lot of them just sort of got slaughtered. But right now, this does pass the first test of, they're up 10 cents day one. That's pretty good.
And let's see if we can pass the test with our final name here for this FLOWMASTER today. This is Pfizer. You know it. You love it. Maybe you hate it. In the headlines right now for dubious reasons. Ticker symbol PFE, trading $32.90, off about a quarter today. On the year, it's off $9.13 or 21 3/4. And the high came in December of 54.93, and now trading $32.90. So giving up the ghost a wee bit from the highs. Mr. FLOWMASTER, it looks like you found a little bit of scratcher lottery ticket paper. What'd you see out here today?
This is a pretty simple one. It was a buyer of 6,500 of the October 33.5 calls this morning when the stock was around 32.81. So stock's up a couple pennies from there. They paid 29 cents. It opens, and just kind of looks like somebody kind of playing for a bounce. I think that the recent headlines I've looked in there, they have a few drugs in the pipeline, and then they have a couple price target lowering at a couple of banks. So just looks like somebody looking for a bounce. As you get into year end, and the market is still up a decent chunk on the year, you start to see people hedge, and you also start to see people kind of tail back where they're trying to place aggressive bets just because the years, hopefully they've had a decent year if they've tracked the market, and they don't want to screw it up.
All right, listeners, now we're going to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode on Monday. And really quickly, let me pay off or update at least our question of the week, which is still going, flying fast and furious. You folks can get at it right now over there at Options on Twitter. This was inspired by our chat a couple of days ago with Mr. Vixologist Jim Carroll, and we were talking about a lot of vol ETP. So we thought we'd put it out to you folks, the ultimate arbiters of all things markets at the end of the day. Which of these four is your favorite alternative in the vol space? Your vol ETP, call it what you will. Gave you four choices: SVIX, UVXY, VXX, and UVIX, the infamous UVIX. We said if you don't like it, you can always write in with others, and you guys did. People actually took the time to write in SVXY. Interesting. We didn't include that on the list, but there you go. But right now, UVXY running away with it. That's kind of surprising. 39%. I thought with the headlines for UVIX and the fact that it's a greater leverage product, it would get more love. But no love for UVIX. 39% for UVXY, 27% for SVIX, 22% for VXX, only 11.9% for UVIX. That one's flying fast and furious. A lot of folks obviously have thoughts on the vol ETP space. Get in there, add options, and make your voice heard as we go around the horn. Mr. Uncle Mike, a lot going on. It seems like I said, this worm is turning. S&P off 0.85% now, below the 43. We were at around 43 double when we kicked off the show. It's right around a little bit below 43.40 right now, 43.39. So we are trending in the dark side direction. NASDAQ off 0.75%. Dow off about 0.85%. What are you keeping an eye on until our next show on Monday, sir?
Well, I mean, 4,300, of course, is the number that I'm watching. It's the big number, so to speak. But the other thing that I'm really taking a look at is that Apple's been kind of dancing around this 180 mark. Apple's not the big holding it was 12 years ago or whatever it was on this show that we seem to talk about every day for me. But it is still a holding. We are still writing calls and call spreads on it and doing that type of thing. But just watching that number. And then Microsoft, watching that like around kind of the 320-ish level, seeing if that can continue to hold. I mean, it's at 330 now, of course, but just watching those two, because it's hard to have a market rally these days if those two stocks don't rally. And aside from all the macro events with which we have, those are the two with which I'm watching.
Mr. Rock Lobster, same question to you. By the way, I just had to glance at our new friend UVIX. I said it was at a 29 handle when we kicked off the show. Yeah, forget that. $33 now, Mr. Rock Lobster. This post-reverse split UVIX, this is a different animal entirely, sir. So A, are you watching this madness in UVIX? Good luck getting a fill out there. And then B, what are you keeping an eye on until the Monday show or perhaps tomorrow's VolView show, sir?
Well, yeah, I got a fill in there. I bought some puts this morning, and I was like, they were selling it off early, and I was holding out, and then it was about even on the day or something or close to it. And I was really thrilled with my fill because it did take literally 45 minutes. And now the same puts are about 50 to 60 cents.
I was going to say, I got lucky. I tried to work a put fly. My broker's like, forget it. We can't. We can't even process this.
Good luck with that. And then I do have. So I have 1/3 left of the position I'm bidding for below, but I did buy some SPY put spreads against it. So definitely not up money, but I mean we'll see what happens. But the product is whipping around. It's doing everything, it's supposed to. Everybody was like, the volatility is 130. I'm like, 130 volatility is nothing in this product. Actually, volatility on the open today was about the low of the year. So if that's giving, listeners any clue, like what I'm watching, implied vols are not the low. I'm going to say not across the board on the vol products, but they're still pretty low considering, like really cheap. I thought so. I've been. I'm actually looking to buy a little more right now. Currently, buying actually surprisingly some upside in VIX. So we'll see what happens. But yeah, let's say like this is actually a pretty solid bid. When we were just trading around 15.5 VIX about literally 2 hours ago before showtime. So. Whatever has sparked the bear, they have not let it go at this point.
Yeah, we are back north of a 17 handle, about 17.15 in VIX now, listeners. So yes, definitely the worm has turned, at least so far, towards the end of the show, listeners. All right, and that music means we have come to the end of another journey through the world of the old OB. So we'll kick things off at the end here with the FlowMaster. Mr. FlowMaster, a twofer. First off, what are you keeping an eye on in these crazy markets? Are you watching this mad whipsaw that is UVIX? And what else are you keeping an eye on until your next appearance next week? And then B, where should folks go if they too want to play with, let's say, the life-to-date flow history or all the other cool bells and whistles lurking over there in the land of trade alerts?
So I will be watching. We do have some earnings coming up. I think is Citibank tomorrow and JP Morgan. So there's some earnings. And then next week is actually CBOE's Risk Management Conference in Austin, Texas, where I will see Mark Sebastian and be learning a lot about kind of what some of the top-end quants and asset managers and academics have been working on. So, do you want to be are you going to
be there for the show next week? Is it on Thursday?
It is on Thursday. I might try to find somebody from CBOE to sub in for me because it's probably right in the middle of the day out there.
So you could be our boots on the ground. Give us like a catch up on the session. See what you've seen so far. That's cool and fun.
That sounds good. I'm absolutely going to take good notes because I got a lot of people counting on me. So I will fill you in and your people.
There you go. And where should folks go if they want all that trade alert goodness, sir?
CBOE.com/RMA. You can request a trial. That's where you will find Trade Alert, Live Vol, FT options, and all the other spectacular things that CBOE has.
Spectacular things indeed. Just life-to-date flow history, let alone, listeners, worth the price of admission. I use it literally every day, probably like 20 times a day. But I digress as we keep on rolling. Mr. Rock Lobster, sir, where should folks go if they want more Rock Lobster goodness? And did you buy all of these OC25 puts in UVIX for 15 cents right now, sir?
I have not. I don't know if I'd buy the 25s, but
yeah, it's a bit of a long way to go.
Who knows with this product?
Yeah,
right?
It could be there. It could be there by the end of the show.
Yeah, it could be 25 by end of day Friday. Yeah, go to optionbit.com 888-TRADE-01 and you get 10% off anything you hear from us. So there you go.
So there you go, indeed. And last but certainly not least, the uncleist of Mikes. He tried to talk the markets up today. Alas, he did the opposite. He killed them all. Blame Uncle Mike. Mr. Uncle Mike, if they want to spew venom your way for killing the markets, where should they go? What should they do?
I said a 50,000 lot, not a 5,000 lot on these long futures. Oh wait, sorry.
There we go.
There we go. We'll see if we can do that. StCharlesWealth.com if you're looking for a financial advisor who is not afraid to give you tax advice or talk about options. Not a lot of people that do that. StCharlesWealth.com or follow me on Twitter at Mike Tusaw, TOSAW.
There you go. And maybe I'll be in line for my semi-annual trip to the hallowed halls of St. Charles soon. We shall see. I'll give you an update on that, listener. That's going to do it for the old OB today, but we're not done on the network, not by a long shot. I'll be back in a little bit with our good friend, Miss Carly Garner. She was talking up triple-digit oil not too long ago. Seemed like it was moving away from that. Now everyone in the Middle East conspiring to bring that back to fruition. So we'll get an update on all things. We're going to talk energy, so crude and nat gas with her. But where else we get? Will it be ags? Will it be metals? You got to tune into TWIFO to find out. All you pro folks, it'll be up in a little bit. All you on-demand folks, that'll be on the feed later today. Back again tomorrow, noon Central, 1 p.m. Eastern, with the once future and present Dr. Bix. Talk a little bit of vol. There's some of that to talk out there these days, not the least of which the mad tale that is UVIX. And then, of course, after that, Options Oddities, the Rock Lobster and I will get to all sorts of fun with Oatly. I'm just looking at his prints. That alone is enough to fill half a show right there. The saga that is Oatly out there right now, listeners. And then back again on Monday, another episode of The Option Block. Stay safe out there, everybody.
The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.